Hi everyone, hope you're all doing well, and today I'm going to talk about the 3 stocks that I sold this week and the 2 stocks I bought this week. So the 2 stocks that I sold, basically something fundamentally changed with them, and I felt like it was probably a good opportunity to go sell them. And with the other stock, I just felt like there was a better opportunity to get more money somewhere else with another company. So I'll kind of go through them reasons why, because like I said, 2 were fundamental change. One of them was I thought there was a better opportunity. And the other 2 was that there was a little bit of a dip in one of them, and the other one was the straight switch for this one, which I felt like there was, I would get a better return from that company. So I'll kind of go through these 2 first because they were pretty much a straight switch, and I'll go through these 2 afterwards and explain the reasons why on them one. So if you could smash the like button if you are new, make sure you subscribe, and if you want to know when I'm buying and selling companies like these, I posted this week on Patreon, so them guys know exactly when I'm doing things in real time. If you do want to know when that's happening, make sure you join the Patreon. The link is in the description. There's also some other good information on there as well, like we do portfolio reviews on there, some exclusive content. Normally there's 2 exclusive videos on there every week, which is pretty good. And yeah, if you do want to start buying some of these companies, make sure you join a free trade account or a trading 212 account. There's a link in the description. You join through those links, you also get a free share. But we'll go through these companies and why I sold them and why I bought these companies. So first of all, I'll talk about these 2 companies. So we've got Mastercard that I sold, and I got Amazon that I bought. So basically the sole position in Mastercard was a straight swap. Sold my shares in Mastercard. I had a little bit of profit in there, and as well with that profit, which was nice, I put it into Amazon, and that was just money for money switch. Now, the reason why I bought Mastercard a while ago is that I had a bit of cash, and I didn't want it just to stay in cash. I was like, I don't want to be too cash heavy. I thought, what's a very safe company that should offer me a decent return over the next few months? I thought Mastercard. I never had some shares in it, and I thought I'll buy it and see how it does. Made a little bit of profit, and now I take it out. And as well as that, with Mastercard, I've already got coverage in the payment space because I'm a big fan of Visa. So basically, Visa is like I think my 3rd biggest position. So I don't really need too much coverage in like the rival, which is Mastercard. And if it comes down to a choice of like which I prefer, Visa or Mastercard, I go Visa over Mastercard. Even though I think Mastercard is still a fantastic company. So I don't really need to have too much more coverage in here because I have Visa doing all that. And like I said, when I think Mastercard, like I do think like the returns aren't going to be anything crazy. So I thought, well, this is a company that I wanted to get into a while, and I'm looking at Amazon and I'm like, well, it's pretty much flatlining right now, and this could be a good opportunity. I looked at the valuation, and I've never got into Amazon because of the valuation side of it, but I'm looking and I'm thinking, well, actually when you look at the earnings growth and the revenue growth, this isn't actually too badly valued. Like this is probably going to be a 2 billion company by the end of this year. 2 trillion company by the end of this year. Not used to saying the word trillion for companies. But yeah, it looks like it is not too bad value because as well you think about the profit they're making now, like the profit's absolutely crazy. I think as well, like obviously the cloud service is fantastic with this company, but when we just take Amazon as a company, like so many more people are like ordering off Amazon. And as long as this like virus is around, more people will probably shop from Amazon because like non-essential retail's shut and stuff like that. But more and more people are going to be using Amazon more than ever. More and more people would have been forced onto their Christmas shopping to do Amazon this year. And I think like the Q4 will be amazing. And I think there'll be more people that was always a bit nervous about using Amazon, but now they're being forced to do a lot of the Christmas shopping on it, and they'll probably be quite happy with the service they got. They'll be thinking, I actually like ordering from Amazon. So I think there'll be a surge of new customers coming in, as well as obviously the company actually being amazing anyway. And yeah, when I started running the numbers through Amazon and I was looking at the profit and the revenue growth, I was like, that forward P, like I think it's like a P of like 90 or something right now, but that P soon drops if you factor in the growth. And as well as that, Amazon always have like beat forecasts by absolutely huge. And I was like, okay, this is a company that I've wanted to own for a very long time, and this was a pretty good opportunity to start. So it's not a massive position right now in the portfolio. It's something that could, over time, if it stays around for the 3,000 mark, could be something that builds up into a decent position. We'll see what happens exactly. But yeah, it's something that I've always wanted to have in my portfolio, and I think that over the next 12 months, it will really benefit. So I thought when I put it in the version of which will have a better 5 years, Mastercard or Amazon, I thought it was Amazon. So that's pretty much why I switched it over, and I've always wanted to have this company, and I think this is a good opportunity to have it. Now I'll go through the next two companies, which were two UK companies that I sold out of. So these two UK companies are the ones I sold out of, which were WH Smiths and Whitbread. So I said on the last portfolio review, I don't think I'll sell anything, but if I do, these will be the two to go. And something kind of fundamentally changed really with my thinking over the last kind of week, 2 weeks since I've done that portfolio. And I don't think I'll be selling any more companies now unless something stupid absolutely moves. But these two were the ones that I thought, you know what, I always bought them with intention of not having like massive gains on them. I just thought they were pretty cheap companies at the time, like probably undervalued, and I did make a nice bit of profit on them two companies as well, and I sold out for a nice little bit of profit on these two. I was looking at these two and I think these two are very massive on travel, and I'm thinking at the moment all we're here is travel getting shut down. There's also the risk of, you know, if one of these variants of this virus gets even, you know, that the vaccine isn't treatable, it's pretty good night for these two, because even though this is kind of like a retail, it needs a lot of travel because of its locations, and this one as well, you know, obviously needs travel because of Premier Inn. And so I thought them two things make me nervous, and I also thought, well, this is probably the most political I'm ever going to get on the channel, but the UK government also makes me really nervous at the moment. They generally don't seem like they have no game plan at all with what's going on. They have no game plan on the vaccine rollout. I have no certainty on when they're going to open things up, because one day they go from, oh, we're not going to shut it down, to like 24 hours they go, yep, shut it all down, it's getting out of hand. And it's making me a little bit nervous, the government that are currently in charge in the UK of these two UK companies, because I generally feel like they're making it up as days go on, and I have a worry that if, you know, we do get to a point where we see cases decreasing, the vaccine rollout, are they just going to go, no, we'll keep the lockdown going? Like, I just generally don't know what their plan is. They have no game plan. I feel like these stores will be back open in March, and I'm looking now and I'm like, are they going to be open in March? I mean, you know, I'm just a little bit nervous with the whole situation that these two are out of control of like where I understand, like I'm relying on the government to make a good decision, and that makes me a little bit nervous. And I've got a few companies on the UK side, you know, Hollywood Bowl, Card Factory, that are in a very similar position, and I thought, well, out of all of them, which two would I want to take the risk off the table from? And it's these two, and it's just because the decision and where the future lies is out of my hands. I'm relying on some other people to make that decision, and the people that I'm relying on to make the good decision to let these open back up, I don't have much belief in at the moment. And that is probably the most political I'm going to get on the channel about the current situation we're in. But yeah, I kind of just wanted to take that risk off the table with these two, and happy to take my profit. Now, I did keep some of that in cash, but some of that cash also went into another opportunity that I thought was a pretty decent opportunity, and I bought this company. So I increased my position in Facebook by 20%. Now, the reason why is because Facebook used to be my biggest position in the stock market, and it is my favorite company on the stock market. You know, when people ask me what's the easiest money to make money on the stock market, I always say Facebook. You know, it's a company that has an amazing balance sheet, it has fantastic revenue growth, it's a profit beast, and it's going to do very, very well. You know, online marketing, advertising is Facebook's, you know, is what it's best at doing. It's the best company in the sector, and the targeting you can do on Facebook, you know, more and more companies are going to up the marketing budget, and they're going to go to Facebook for it because they get the most outcome for the money they're putting in. Now, Facebook has had a bit of a rough time, and because of it having a rough time, that's why it's dropped out of it being my largest company, and I think it's dropped down to second now when InMode's overtook it. Now, as much as I love InMode, I don't know if I want it to be my biggest position. I always want Facebook to be my biggest position. And because of the shares dipping down, it has slipped down, and I thought, well, I want it to go back up there. And obviously when it recovers, it might go back up there as well. But I thought, you know, I want to kind of just resort that out. I want to get Facebook back to number one. So what I did is increase the position in Facebook by 20%, and because of that now it makes it back up to my biggest position. I think that Facebook will outperform both of these companies as well, which makes it a good decision to move that to there, I thought, as well. And yeah, I mean, Facebook's in a bit of a situation at the moment because it's had just a bit of negative news. It's an easy target. The media like targeting Facebook. It's pretty much the US version of Boohoo. It's very targeted by the media. First of all, obviously there's been a few things with the Apple scenario, and Facebook not being able to use relevant data from Apple, and Apple banning that, and it might, you know, affect how much Facebook can target certain people with advertising. I don't think that's a problem, because I think marketing will still come to Facebook for marketing that are using it, because it's still a better version than putting a billboard up. You still get the direct link to companies' websites and everything like that, and liking the Facebook page rather than a billboard. You can't like a Facebook page on a billboard, for example. But yeah, I think obviously Facebook it loses that little edge, but it's still nothing huge. Like from profit revenue side, it shouldn't affect it. Obviously, there's another situation where Facebook are now going to share information from Facebook to WhatsApp, and some people don't like that. But I generally think there's all these other messaging sites that are boomed because of it, and people are saying, "Oh, go to that one." But I think WhatsApp's still going to be WhatsApp. If people are still going to use it, I think that's kind of the dominant one, and it'd be hard to knock the king off now. I think WhatsApp is the king of messaging, same as Facebook, Instagram. Other platforms might come on, but I think they still dominate. So even though it might be a little bit of a short-term hit and we might see it in some earnings reports, I still think that they are the dominant players in that area as well. So I think from that point of view, Facebook's fine once again. And there's also the little look into if Facebook's dominating the social media industry. I mean, worst case scenario, if Instagram, Facebook, Messenger, if they all get broken up, I still think that will work pretty well for the company, because imagine having you can buy shares in Instagram, which is the growth platform, or the Facebook, which is the value platform. I think the shares will probably perform even better if they were separate. Like I see Instagram going crazy. So yeah, I think that if it was to do that, I actually wouldn't mind it, because I'd love to have shares in just like Instagram, for example. So yeah, I think if that was the worst case scenario, I think that'd be fine. But I've got to say, they're looking into Facebook for dominating the social media play, even though there's TikTok, Snapchat, Pinterest. When you got someone like Amazon that's killing the online retail, or Google that has 90% of the search engine market or something like that. It's strange that Facebook's the one that always catches the headlines, when there's definitely other companies as well that are definitely more building more of a monopoly, in my opinion anyway. So the worst case for Facebook is, I actually think it's still okay, and I don't think it will affect it too much. So yeah, even though there's a bit of a sell-off at the moment, I'm happy to buy. This sort of range for Facebook is interesting, and it could be, if it goes down a little bit more, could be one that I just top up a little bit more, because I'm a big fan of it overall. So yeah, those are the 2 stocks I bought, the 3 stocks that I sold. I hope you enjoyed it. If you could, smash the like button. If you are new, make sure to subscribe, and I'll see you in the next video.